Hello, and welcome to this webinar presented by the IFRS Foundation. I'm Neil Stewart, Director of Corporate Outreach, and I'm your host today. First, some housekeeping. Please ask questions during the webinar by clicking the Q&A button in Zoom. We'll be focusing on today's theme, ramping up systems and processes for sustainability data. We won't get to all of the questions today, and some might be outside the scope of today's topic, but we will consider all of them in our educational efforts, including webinars like this and other communications going forward. This webinar is being recorded and will be available on the IFRS Sustainability Knowledge Hub. We have closed captioning enabled. You can turn it on in Zoom. Live closed captioning isn't 100% accurate, but we hope it helps with the accessibility of the event. Another quick disclaimer, the information and topics discussed during the webinar do not constitute implementation guidance from the IFRS Foundation. Now, I want to say welcome to everyone joining live around the world, as well as those listening on demand. And here's a look at our registration. Over 3,200 people from 140 countries have registered, spanning corporate sustainability officers, consultants, finance and reporting executives, as well as the accountancy profession and academia. Now, as we go along, we're going to be posting links to resources in the chat, and we'll also send them in a follow-up email along with a copy of the slides. Now, just before we meet our speakers, let's take a quick look at the key topics we'll explore in this session. This slide gives a high-level overview of today's discussion, spanning everything from the systems needed to gather sustainability data, internal controls, the evolving role of finance and audit teams, and this really sets the stage for the panel conversation that you're going to hear shortly. Now, who will be our speakers today? Well, to lead off the discussion in just a moment, Veronika Pountcheva is a board member of the ISSB since 2022. She brings extensive experience in sustainability strategy, corporate responsibility, and international leadership. And I also want to welcome our guest speakers who will bring expertise from different perspectives. So today I'm joined by Lucia Wind, Chair and Executive Director of COSO, Sharon Jagd, Director of Net Zero Finance at the We Mean Business Coalition, and Sharon Machado, Head of Sustainable Business at ACCA, or the Association of Chartered Certified Accountants. Now, as we get into the discussion, I want to highlight that while the ISSB standards set requirements to provide investors with structured, decision-useful information about sustainability-related risks and opportunities, the standards do not prescribe exactly how companies should go about preparing that information. Systems and processes will look different depending on a variety of factors for every company. And so that's what we're discussing today. We'll start by hearing from ISSB member Veronika about aspects of ISSB standards that are particularly relevant to this challenge. Then we'll open up to the discussion with our other panelists. So Veronika, first to you, what are the key messages that the ISSB would like preparers to understand about the processes leading up to the disclosure of high-quality sustainability data?
Thanks, Neil, and hello, everyone. Welcome to this webinar today. I want to focus first on how the ISSB standard, IFRS S1 and S2, can help companies ramp up systems, processes, in order to deliver investor-grade sustainability disclosures. For many entities, this involves collecting new data types, finding new sources, coordinating across business units that haven't traditionally reported externally. And this creates complexity. But the ISSB standards bring structure and discipline to help companies meet that challenge. To start with, I want to highlight two key areas: the conceptual foundations outlined in IFRS S1, and secondly, the set of qualitative characteristics that define what makes sustainability information useful for investors. As first, the conceptual foundations, materiality and connected information, and as a reminder, these are only two of the four conceptual foundations in IFRS S1. So let me start by saying that materiality is central, and I don't think that that's new for you. But the IFRS standards take an investor-focused approach, asking companies to report on sustainability-related risks and opportunities that could reasonably be expected to affect their cash flows, financial position, or access to finance. This helps focus disclosures on business critical issues while also avoiding unnecessary detail that can obscure what truly matters. The second element, the second part of the conceptual foundation, which I want to talk about, is connected information. So connected information is equally important because sustainability disclosure should not sit in isolation. They need to be clearly linked to the company's strategy, performance, financial reporting. For example, if a company identifies significant physical climate risks, it should also explain how those risks are factored into decision on capital allocation, on supply chain strategy, financial planning. And the standards do not dictate where this information should be located in the report. They emphasize that it should be presented in a way that clearly highlights these connections. So these ideas are not just theoretical, they are highly practical when designing internal systems. And they help companies decide which data to prioritize, where it belongs, and how it connects to the bigger picture. The second aspect which I want to touch is about the qualitative characteristics, which are faithful representation, comparability, verifiability. What is faithful representation? It means that data must be complete, neutral, and accurate. That includes reporting on actual performance, not just commitments. And this means disclosing uncertainties, limitations, avoiding selective or overly optimistic messaging. When you talk about comparability, this is about how comparability allows investors to assess trends across time or between companies. This is why consistent definitions, metrics, methodologies are so important, especially in global markets. Verifiability is another aspect which gives investors confidence. Investors need to know that reported data can be backed up through internal controls or through audit processes or through third-party assurance. So ultimately, these elements help companies professionalize their approach to sustainability data, turning fragmented systems into something more robust and decision useful. For many people who are joining today, this is not going to be new information. You'll be familiar with these issues already. The ISSB standards rely on well-established concepts in the preparation of financial statements. Therefore, many companies will be able to leverage existing processes and systems for data rather than reinventing the wheel. In summary, these principles are not just about compliance. They're about building trust, supporting sound capital allocation, and also embedding sustainability into the core of the business decision-making and business steering. That's the kind of data that the market actually is asking for.
Thank you, Veronika, and thanks for really helping to paint that backdrop for the discussion that we'll have now with our panelists. And I want to start with Sharon, but just before that, I want to remind our audience that after this initial round of comments, we'd love to take your questions, and also want to remind you that the slides, links to resources will be sent to all participants after the webinar. And you can always connect with us by emailing us at capacitybuilding@ifrs.org. So let's turn to Sharon Machado. And from the ACCA's perspective, Sharon, how are accounting professionals and sustainability teams setting up systems to collect and structure data to integrate sustainability data in a financial reporting? And particularly thinking about collaboration with finance, audit, internal control functions, what are some of the main challenges that they face?
Excellent question. And over the last few years, we've been doing quite a bit of research in this space. And our work to support creating and using sustainability information was actually informed by organisations doing this. And what we discovered is that fundamentally they were telling us that they were using something that we've summarised as an 8-stage production cycle to produce interconnected sustainability and financial information. So actually delivering on the connected quality that Veronika was talking about. And by the way, this 8 stages covers aspects of process, governance, system, and getting people ready in the context of the requirement of our sustainability reporting standard. And in particular, very specific areas around identifying reportable risks and opportunities and their material information. Now, much of that work you can find on our Sustainability Reporting Hub. But actually, to turn to the question around approach taken, challenges and collaboration. On approach, stage 1 and 2 of our 8-stage production cycle indicates that what organisations are doing is, for sustainability reporting, where they can, they're leveraging their financial reporting system. And a key aspect that goes alongside that is documenting and updating the roles and responsibilities of the various people that are involved in creating such information. However, one of the challenges when we think about the reporting requirements is that when we look to SMEs, in our 2024 survey out to SMEs, we discovered that actually only 47% of these SMEs are saying that, well, actually, they don't have a system to leverage, so therefore they need a whole brand new system to do this. And actually, where they did have a system, 33% of them are actually saying that those systems needed at least moderate change. And actually, most worryingly, what we were hearing is that very, very few of them actually paid proper attention to actually understanding the various roles and setting those roles and responsibilities for things like collection and analysis of various forms of sustainability information. And on a deeper dive, we discovered that what they were telling us, beyond not having a financial system to leverage, is that a good number of them were using spreadsheets. And by the way, it was around about 56% that told us that they were relying on spreadsheets to collect information. And also what they hadn't really thought about was the value of internal sources of data collection. Other reasons included aspects that we actually cover in stages 4 to 6 of this production cycle. And what they were telling us is that some of these challenges are around new data requirements, new measurement techniques, things around presentation and format, so catering for the variety of stakeholder requests they're getting beyond the actual disclosure itself. Now, one big thing that we have discovered that is not sufficiently happening is the connecting of insights, sustainability-related insights, between environment, social, and financial. In actual fact, it's well below 40% when it comes to connecting such risks to their risk management and financial impact. And in a very recent survey, so in fact only last month, on risks and controls, another area, we found that only 41% were following COSOs or a similarly robust set of guidance. And this lack of control, this lack of connectivity, if I were an investor, I'd be turning around and thinking of questions around integrity, over the assertions around progress on strategy and the financials that are being made. You asked me about people as well. In terms of the key challenges that we were being told about, are fundamentally around sourcing strategy, because we know that organisations need a wide range and flexible access to sustainability skills, and also a rare combination of business with expertise in, let's just say, 1 or 2 sustainability topics. Now, staying with people and collaboration and thinking beyond, you asked me, I think, about finance, audit and control in particular. What we're seeing is that what sustainability is bringing is all within the organisation needing to work together for things like horizon scanning, scenario analysis about risks and opportunities, which is actually stage 3 of this production cycle that I was mentioning, to identifying and collecting the material information for reporting, and recognising that a good amount of it, yes, is structured, but a lot of it is going to be unstructured data. And that then leads to aspects of verification and continued improvement. However, when we think about people and the variety of different people that need to come together, we know that they're going to have different technical and engagement skills, and actually may even apply ethics differently. So we know that applying the principles of sustainable development may well give rise to different decisions if you're applying a business ethics code, or indeed the ISSB code that we accountants will follow. So let me just give you a little example, and it's one that's coming up in ACCA's half-day sustainability conference next week. We have a case study of a major conglomerate in Sri Lanka who collect and they get their sustainability related data into their finance systems. They do have a connected system for various teams to use. Now, this conglomerate is required to collect information from a good number of their micro agricultural suppliers who either won't or can't engage directly with the data system they have. So they have business relationship managers who go out and collect the structured and the unstructured sustainability data. And it's as part of their ongoing relationship management meetings. And that's then input into the systems for the various teams to use. But then if you think about environmental experts who are plugging that data into their climate and biodiversity modelling, as compared to other teams such as procurement, sales, decision makers, preparers, doing the right thing may play out differently. And so what this conglomerate has done and really built upon is actually developing an ethics policy that all are trained on internally and externally. They're reminded about, they've got to confirm compliance, and they're appraised upon. Now, I know I'm running out of time here, so I've got plenty of more examples around collaborations, and maybe, I'll have an opportunity to talk about a little more of them a bit later on.
Well, thank you, Sharon. It's quite amazing to hear about that spectrum of approaches, from leveraging the existing system for financial reporting to companies that don't yet have any system and need to create one. One thing I really like that you said was pointing out that this data is being used to meet a variety of stakeholder requests, and both external and internal. And I think this is important to highlight, given that the investment that companies are making into systems and processes, which can be significant, is paying off not just for compliance, but for strategic and operational teams, as well as customers and suppliers, and right up and down the value chain, right? So the investment has multiple returns when companies are building out these systems and processes. One other thing I want to ask you about briefly, and that is, how are companies getting the skills that they need? How are, for example, accounting and finance teams upskilling to learn about sustainability and to be able to gather and report the data?
Yeah, and actually one thing that you did pick up on is around the fact that the investment we're talking about in reporting isn't just reporting itself. We are strongly urging actually the investment to be around sustainable value creation as well. And that's actually something that we have inbuilt in our upskilling. I mentioned our sustainability reporting hub a little bit earlier on. And the way that we know that our members and indeed non-members like to engage with it is very much as a one-stop shop. And it has overview guidance for leaders who might have to be making these investment decisions, to the detail for those that are actually in the doing, as it were. And then workshops to build skills and tailor actually guidance, because one size doesn't fit all, to various organisations, together actually with video explainers that we were really grateful to have the support actually of the of your ISSB board member Sue Lloyd and Ravi as well, who outlined, some of the trickier aspects of the standards themselves. Now, one aspect of upskilling is actually about knowing the policy requirements, whether they are, what it means to be a sustainable business, how to go about procurement, dealing with emissions trading schemes, carbon border adjustment, but actually also, of course, the reporting that we're here to talk about today. And we've discovered that awareness is variable. So events like this are really, really important, and we certainly seek to support the IFRS Foundation in these efforts. And we use the outreach to raise awareness, but actually also to garner insight, to develop our own policy positions, which we use when standard setters and regulators alike consult. We've actually published our policy views within the Principles of Good Corporate Reporting. And our policy and research insights inform, yes, the guidance to members, but actually also what goes into the qualification and how it goes into the qualification. So, by the way, the qualification includes the detail of IFRS S1 and S2, but actually also the necessary strategic considerations, business models, governance, risk management and control, assurance as relevant to each of the qualifications subjects. So we've taken an integrated approach to this. And our policy and insights flows into continuing professional development. So we've got courses, certificates, and we've actually recently launched with its first exam sitting and results out in the last few weeks for our professional diploma in sustainability. Now, much like the standards themselves guide, the diploma and actually all of our offerings take an end-to-end view necessary to be to create quality in reporting, be it from setting a strategy all the way to reporting, and of course the integrity that comes from the assurance. And actually, much like our qualification, all of our CPD is actually developed with education regulatory compliance in mind. Now, learning is one thing, but it doesn't make a difference unless it's acted upon. And we aim to inspire action by doing what we say and actually telling the stories like that Franklin conglomerate that I mentioned a bit earlier on. Actually, from our own perspective, doing what we say means having our own net zero strategy and commitments to our UN SDGs, which we report upon within our integrated report, which in itself is transitioning to incorporate IFRS S1 and S2. Now, collaboration is a really important mechanism to lead to upskilling that's actioned upon. I'd like to end with a really quick example of something that we found incredibly powerful. So for a process or system development collaboration, and we know it's a huge investment, what we've seen brought together are various individuals and organisations, and they typically comprise one who's got sustainability knowledge about the process in this case. So let's talk about a process development or a systems development, and that could be an academic, professional accountant, or an expert in a sustainability topic. And there's someone with practical experience, so an organisation who's actually started that journey, so it's got something to tell and share about that experience. To then organisations who are lesser experienced, so in other words, willing to try, contribute their insights about the organisation specific. So maybe it's stuff around their size, sector and geography that's relevant to the development of this process. And then, of course, a project manager or someone to document, like a professional accountant or a business analyst. The outcome then will be a jointly owned process or a shared system to do the data collection, cleaning, analysis, and so on. You can see how valuable this might be in inspiring, upskilling, sharing the effort, driving innovation, and actually fundamentally quality in information. We've got loads of examples in our SME guide, so please, do explore them and speak to us about adding to them. We'd love to hear your views.
Well, thank you, Sharon. That is very helpful and a great note to end your comment on there about collaboration. Let's bring Lucia into the conversation now. And why is it important? There's two parts to my question. There's a why and a how question. So why is it important for sustainability disclosure to apply internal controls and risk management principles that really are carried over from financial reporting? And how can the COSO framework help companies with this?
Yeah, thank you, Neil. I'm happy to be here. So on the why, I will step back a little bit and just highlight the fact that sustainability reporting has been out here for quite some time. I know there is now obviously requirements and standards around it, but some of the numbers that we have seen, for example, in the US, is that as of early 2020s, 96% of publicly traded companies in the US were already reporting sustainability metrics to the public, which obviously was informing the shareholders and the stakeholders and potentially their investment decisions. So this information has already been out there used by the public. With the international markets, unlike the US, some of these disclosures are now subject to assurance, right? So having internal controls and having sound practices is very important and very critical to make sure that you are driving routine and repeatable processes, have transparency and improvements in your accuracy of controls, and really not to kind of use the sustainable word, but you're really making your reporting more sustainable around sustainability when you have controls that are tested, proven, monitored, assessed regularly, right? You're driving more transparency into your process, and you hopefully by that making your processes more streamlined as well. It brings the various stakeholders together. It is something that is assessed and evaluated by companies routinely and repeatably. So controls are very, very important into this. Kind of the flip side of the challenges is, unlike financial reporting, which has been around for quite some time, and what you've heard the other speakers, Sharon and Veronika, mention as well, is you are dealing with multiple stakeholders in a company. Many of them have not been part of financial reporting before, so reporting requirements are new to them. The rigor of internal controls to the point that they're subject to assurance is new to them. So education is very, very critical. I think you have complexities with the stakeholders also around the fact that you have various functions that have done audit reporting requirements for companies. So typically your CFO and Chief Accounting Officer function has been involved with your financial reporting. You have your human resources, potentially legal function that is involved in your proxy reporting. And now you're bringing the complexity of sustainability reporting, which is probably bringing completely different stakeholders or subsets of those functions as well, that have to come together to identify the right controls and to be able to report on them and make sure that you have consistency in your process. Some of the information may be in your proxy, some of the information may already be in your financial reporting. And so now that you have separate sustainability reporting requirements, bringing those stakeholders together is very critical to make sure that you have consistency in that process as well. As others have mentioned, systems and data sources are a challenge that we see. Many of the information is coming from manual reporting, from spreadsheets, potentially from third-party vendors, right? And so you're relying on third-party data that you don't have visibility sometimes necessarily into what kind of processes, underlying processes and assurance they have in place when they report that information to you that you are now relying on. So certainly ensuring that you have SOC reporting or audit rights in your third-party vendor contracts to make sure that you can get assurance or kind of reliability of that reporting data that you will be utilizing on the end is very important. And so one of the things that I will highlight that I'm very proud of what COSO did is a couple of years ago, we actually did issue a report around sustainability and internal controls. It is called the Achieving Effective Internal Control Over Sustainability Reporting. We call it ICSR guidance. It is based on our ICIF guidance. So if you're familiar with COSO and the internal controls integrated framework that has been used by companies for financial reporting, it is an incredibly powerful tool for companies to use. The ICIF, which was the basis, is a framework that companies have been using for almost 40 years, certainly more predominantly in the last 20 years when Sarbanes-Oxley requirements and some of the internal controls over financial reporting requirements came into play. But it's truly a proven framework that has been used by companies, that has been audited by assurance providers and external auditors. So applying this particular framework to sustainability reporting, I think, is a great tool. And I know Sharon mentioned in her report that there's a fairly, I think, less than 50% of companies are using it. I would encourage you, if you're trying to figure out how to get your hands around having the right controls over sustainability reporting, this guidance is out there. It's free to download on our website, and we can also share the link here. It is also available in multiple languages. So if you are a multinational organization, we have a translation of it in Spanish, in Chinese and Japanese. Certainly, if there's a request for other languages, we can accommodate that. But truly, this guidance is something, again, that has been used by companies for financial reporting, and it's proven. And it provides specific examples as to how you navigate through sustainability reporting by using this framework. So if you're familiar with the COSO cube and the 5 pillars that we have, the 5 components, right? It outlines the processes and the principles and controls that you should have around your control environment for sustainability reporting. So kind of what is your governance layer around that data? It provides tools and ideas and suggestions as to how to do an effective risk assessment to make sure that you are considering the full universe around sustainability reporting. What are some of the risks where you may potentially have gaps where you don't have controls? So you have to go deploy those controls. It helps you figure out what those right controls would be. So that's your control activity layer of the COSO cube. How are you reporting communicating this information internally and obviously for the purposes of this conversation externally? And then kind of it helps you kind of close out the process on monitoring and continuous improvement. So this is a process that's routine and repeatable, as I mentioned. It's not a one-time done checklist. It is something that you continue to do and hopefully becomes part of your DNA to make sure that it becomes, again, routine and repeatable, as I mentioned earlier when I started on this topic.
Lucia, that's incredibly helpful. And it's interesting that, as you pointed out, sustainability reporting is unlike financial reporting in certain ways, although we're leveraging the same systems, controls, risk processes that borrowed from financial reporting. You highlighted the difference in stakeholders. You're gathering this data from a variety of different stakeholders. But there are also some differences in the nature of the disclosure and the nature of the data. Maybe you could talk a little bit about the challenges that internal audit teams face when it comes to this new kind of reporting compared to traditional financial reporting.
No, absolutely. I think, and as a former practitioner, so I used to lead audit functions, and I was the head of audit for many technology companies prior to my role with COSO. I understand certainly the practitioners' challenges with the boots on the ground that they're facing. One of the big things that I have seen and that we see is the fact that there's lack of dedicated resources for sustainability reporting even to this day. Financial reporting, typically when you're going to audit that, you have your CFO function, you have a chief accounting officer, established processes, right? You know where to go. Some companies have still not dedicated resources to sustainability reporting and really just made this reporting part of somebody else's job that already had a similar role in a company or had a role in a company around compliance. Potentially it was your internal control function. And so kudos to those companies that have established, ESG controllership type roles or programs in their company, but some companies have not. Resources are scarce, and that seems to be a challenge when internal auditors come and ask those questions. They want to look at the processes. They want to see, in a perfect world, your documentation, your process narratives, of flowcharts, right? And when you don't have dedicated resources, and this is part of the role of other functions in a company, it presents issues in their processes in auditing these functions or the controls when you have a decentralized approach to sustainability reporting. So dedicated resources is definitely an issue. I already mentioned, data with sustainability reporting, it tends to be qualitative in nature. Sometimes it's an estimate, sometimes it's forward-looking, and auditors are used to actual numbers, right? Processes that happen, that there's factual evidence to it, they're auditable, and sometimes the information, when it's future forward-looking, that underlying documentation may not necessarily be there, right? You're looking at estimates, you're looking at projections, so that's an issue. We've seen internal audit lack established frameworks for sustainability reporting. Hopefully now, when I mentioned the ICSR guidance, that will be something they can go lean on to make sure that they can develop their testing and their approach based on the framework that's already out there. And as I mentioned, there's fragmented ownership across departments. And so the handoffs, typically when there's handoffs of data, you see gaps in a process. There's potential for error in that reporting. So probably a lot of topics that I already mentioned and others have mentioned, but resources, reliable systems that are not necessarily spreadsheets are certainly the challenges that auditors see that they have to get comfortable with then and potentially do additional procedures, right, and ask additional questions. So streamlining this, making it routine and repeatable by having processes and systems and dedicated resources would go a long way to make sure that this is something that becomes easier for companies to implement and monitor.
I think that's really helpful and practical advice, and definitely for our audience to look to COSO's ICSR guidance. The framework that they've produced is extremely helpful as you build out these processes. Turning now to Jane Jagd from the We Mean Business Coalition, and you've done a lot of benchmarking work. And what I wonder if you could explain is, what are the most common data and process gaps that you see in sustainability disclosure?
Yeah, thank you so much. Yeah, it's true. We do a lot of benchmarking within Women Business. We work with more than 18,000 companies around the world. So we see a lot of different reports, and we try to guide companies to be better at it. And we also try to educate some of the users of the reports to be able to use it. What we see right now is that we are sort of on the first part of a journey. So we can see some companies who are really, really good at this. We can also see some who are perhaps laggards. And what we see is exactly what Sharon indicated earlier. Those companies who are able to integrate their financial and non-financial departments, they are the ones who make the most coherent reporting. And we can actually see that the old TCFD, which is the basis for ISSB, is still very much alive. The companies do many of these scenarios that they are supposed to do, but they do not quantify them and they do not monetize them still. There are a few who does, sure, but most do not. So that is some of the areas where we definitely will have to see that the integration, the co-work across the companies will have to be better in the future. Another thing we see is that we can see in all the jurisdictions where it's now mandatory that they have to report given a given regulation, and they have to have assurance. We can see also now that they have more internal controls. So it's really good that Lucia is also indicating that this is free to download. Super, go for that. We also had a dialogue with IFAC this winter. We also heard from all the companies, it is very, very difficult to have all this assurance and you're not prepared. So therefore we made a guideline. How can you organize it within the company? So really, really helpful for companies to know how to bring all the dots. But in reality, what you can do is to reuse what you already have. You don't necessarily have to buy new systems. You can use the financial systems very, very long, and the financial setups can be extended and reused also for non-financial reporting. So when we see that, it's really, really good. What we also can see is that many of the 24 reports actually, where they have new legislation, they have actually either erased or restated their comparison data. And we think it is because either they have a more clarified indication of what they should do, how it should be defined, but it's also very sure that many of them actually restate their data because now they have assurance. And it was actually pretty difficult to assure some of the data they made previously, perhaps in spreadsheet and other places. So it does matter to have a good regulation. It does matter to have good assurance, because then the data will be more complete and more useful for the users.
Excellent. Now, Jane, turning the page a little bit, earlier we talked, I pointed out that the investment companies are making is paying off more widely than just reporting. And Sharon addressed the investment companies are making in upskilling and training. But what are, how do you see the demand for sustainability disclosure influencing how companies are investing in systems and governance?
but you can see it also now because we have many banks, for instance, who are asking for data. If you want to have a loan, then they ask for data. We also have the situation of, for instance, supply cascade. So if you're a big customer and you ask for that, if I'm going to buy your things, then we would also like to have some data, for instance, some greenhouse gas data from you. Then you would have to be able to provide this. And they might even ask for that this data is assured. Then you will have to be able to provide that. And that is also the freedom of making a contract. That is exactly that the customer can say, I want that information. And they will get it for sure. So that is what we see a lot of. And then there will also be XBRL also in the future. The good thing about XBRL in the future is that if you use AI to make your tagging, because manual tagging is horrible, but if you use AI to actually leverage it, it will not be very complicated, but it will make it a lot easier for all the users of the data to actually be able to identify the companies who have been good at, for instance, decarbonize their production and be able to identify them on their way. And that is what the investors would like. They don't need to see companies when they're totally green, because that is when everything is known to the market. What they would like to be able to do is to identify the companies when they are on their way, because that is the hidden gem. So that is why it is so important that the information is right.
Excellent. Jane, that's really helpful, and it's great to get the evidence from the real world. What are companies do? I also like that in ACCA's approach, Sharon. It sounded as though you start not from preaching what companies should do, but what are companies doing? What are the leading companies doing? And let's go now to some questions that have been coming in from the audience. Maybe I'll start with one for you, a pretty simple, practical question, Jane, so Sharon mentioned earlier some ACCA survey that showed that quite a lot of companies, especially SMEs, are still using Excel spreadsheets to gather and house this data. So simple question, why is that a problem?
Well, because you don't have an audit trail within your Excel sheet. You can change it constantly. And the other issue is, of course, also that you might not know what the source of the data is. Plus, it might be difficult to consolidate. You can then say for SMEs, they might not consolidate a lot of data, but they wouldn't do it financially. Then why would they do it non-financially? So if they treat it with the same respect, the non-financial data, then they would simply use their financial systems for this also. And it is actually possible to use your financial consolidation system, for instance, also for your non-financial. You don't have to buy a new system for that.
Very good. Sharon, a question for you, and this is again coming from the audience. And so, yeah, the production cycle that you explained was really interesting. And by the way, it's also looks great. It's a very colorful pattern, kind of a pinwheel pattern. But the question here is, are you basically saying that the management system of a company should incorporate sustainability and ESG? Is that what your production cycle really represents?
Yeah, you know what? In an ideal world, the answer very simply is yes. And it's actually yes for, many of the reasons that myself, but actually in particular, Lucia and Jane have articulated in their earlier comments. And it's really about the fact that where there is a financial system, and ideally that same financial system is being used for management information as well, yeah, then there should be a good set of controls that are there in existence for them. And to some extent, that provides some assurance over the quality of the sustainability data going through it. Obviously, there are some additional considerations that all of us today have highlighted, but it's a really great place to start certainly if you can. And actually it also then leads to being so much more alert to the sustainability related risks and actually how they connect, going back to the fundamentals of IFRS S1, being alert to your sustainability related risks and opportunities that can reasonably affect the organization, and then in turn material information is more likely to be connected in a way that actually your stakeholders need. So in short, the answer is yes, because you're more likely to get the information that people need and you need, and the control environment is existing for financial is a great place to start.
Super. Thanks for explaining that. Quick question for you, pretty simple question about the ACCA diploma. And the question is it really aimed only at accountants, or does the target learner group also include sustainability professionals and practitioners?
Okay, so in quick answer, it is aimed at business and finance professionals in particular. So they don't have to be accountants, but it comes with that basis that typically a business and finance background and accountancy one, of course, will then allow you to segue and better understand the sustainability aspects as they relate to the end-to-end that I spoke to. That's not to say that in the future we might think about what we do to be more inclusive, but it's where we started.
Super. Okay, let's turn to a question, another audience question, this one for Lucia, a question about internal audit and assurance. And the question is, are there examples where internal audit teams are involved in sustainability data assurance? Now, I'm sure it might be hard to actually name specific companies, but maybe you could talk a little bit about real world cases of how internal audit then works with the process of external assurance.
Yes, I was actually in the process of responding to that question in a Q&A. I was trying to track this down. So good for you to ask. So yeah, I mean, we do not disclose the companies, obviously, because of the processes and controls. But when internal audit functions do their annual risk assessment, so presumably that you're doing that, if your internal audit function that has a risk-based audit plan, you should be doing your annual risk assessment. And if sustainability reporting is something that your company is subject to and is required to do, that should automatically trigger in your risk assessment and your audit plan purposes. So that is something you should be adding to your audit plan, comparing to all of the other requirements and risks that you have identified as part of the risk assessment process, and adding to your audit plan to present to the audit committee to be approved. That is typically the process that internal audit functions do around scoping their work for the upcoming year. And so if sustainability reporting is a requirement for your company, I would suspect that that is something you should be adding to your audit plan and dedicating resources to help with that assurance. There are two approaches to that, right? You can provide a formal assurance to your company where you are reviewing the information prior to being actually included in the final report. So there is an assistant that you can lend to your company to be that independent view, because you are a function that is independent to all the processes in a company. So it can be a check that a company does internally before you publish to ensure that you're complete and accurate, kind of give you that feel-good approach to you have done everything correctly before it's being disclosed publicly. You can also take an approach where you help the company map their processes. So you come in before the assurance step and you make sure that the process is set up accurately. So it's a step before you actually generate those numbers. And you can, hopefully alternate where maybe you come in on the earlier side if you haven't done so as an internal audit function to help assess the processes and identify any gaps or improvements. Hopefully companies are past that step, right, with the reporting requirement upon them. They have gone through that assessment, but if you have not, then I would encourage you to have a conversation with your leadership in your company, and certainly with your audit committee that you report to as an internal audit function, or the board of directors that you report to, and add in this assurance step to your resource plan for the years to come to assist the company. And hopefully that is something that's going to be received very well, because again, that leadership of the organization should want to make sure that the information is complete and accurate.
Super, that's really helpful, and I don't think it's too late for companies to be looking at this, Lucia. The standards are coming into effect, and we're now at 35 and plus jurisdictions around the world and they'll be coming in over the next few years in different phases. But now is the time that companies can be doing exactly what you're talking about. I think that's really helpful to hear about how the internal audit function assists with assurance. A reminder about the ISSB standards do not require assurance, but of course we see many of the mandates, the rules, regulations coming in around the world that do require assurance. And we addressed the topic in episode 5 of this webinar series. We looked in detail about at sustainability reporting assurance. All right, well, we're coming toward the end of our webinar, and I want to go to you, Veronika, for a last word. And we've referred a little bit to the different nature of sustainability reporting and data and the ISSB standards do allow for estimations and indirect data and proxies, ranges. How should companies balance the need for completeness with the challenge of uncertainty, especially when you get to data from across the value chain?
Yeah. Well, that's a really very great question. Thank you, Neil, for that. And I know that we spoke about how to manage data and processes, and this is absolutely critical. How to manage when we don't have exactly all the data which we need to have. And the standards allow companies to use reasonable and supportable information, including estimates, proxies, and ranges when actual data are not available, especially if obtaining precise values would require undue cost and effort. And we know that this is specifically complicated when you talk about value chain information. And I know that we don't have that much time for this conversation. Therefore, let me just remind you a couple of principles. Number one, faithful representation still applies. Even when estimations are involved, companies must aim for faithful representation. The data should be complete, neutral, accurate to the best extent possible, including disclosure of uncertainty. So when we don't have all the information, we have to disclose the methods used, the sources, any significant assumptions or limitations, for example, industry benchmarks, spend-based methods, suppliers, averages. The other thing I want to remind you that it's expected that we all improve over time, because the use of estimation should not be seen as a permanent solution. The ISSB expect companies to improve data quality and coverage over time, and investors expect this as well. So particularly when you talk about systems, supply chain transparency, evolution. The link to materiality and decision usefulness is critical. And the goal isn't perfection, it's decision usefulness, it's risk, opportunities, material, which are material for investors making their decisions. And companies should make every effort to estimate and disclose, even with uncertainty, rather than omit it entirely. In short, estimates are part of the reality of sustainability reporting or reporting in general, but they must be used responsibly, disclosed transparently, and supported by a path forward improving data quality and internal processes over time.
Excellent advice. Thank you, Veronika. So thank you also to our panelists for your insights, and thank you to everyone who participated in our webinar today. Before you go, we'd just like to remind you about some key resources to help you on your ISSB standards journey. The IFRS Foundation offers a number of programs and resources, including our website and our Knowledge Hub. More than 200 resources from the IFRS Foundation and our capacity building partners, including some on this call today. The IFRS Sustainability Alliance. This is a membership program for education, tools, peer networking. The Fundamentals of Sustainability Accounting Credential, or FSA, which really instills the link between sustainability and financial performance. And finally, of course, our main website at ifrs.org, where you can sign up for alerts about different types of announcements. Please remember that your use of our resources and your participation in our programs also supports our mission as a nonprofit standard setter. Please stay involved with the IFRS Foundation, including through this webinar series going forward. Follow our LinkedIn and news updates to learn about more in the series, covering a variety of topics, including coming up the transition from the TCFD recommendations to the ISSB standards. And you can also listen to the ISSB monthly podcast to stay up to date. Well, I'm Neil Stewart with the IFRS Foundation. On behalf of the team here, thank you very much for participating. Until next time, thank you and goodbye.